Hello friends, this is Dr. Amarjit Kaur, Professor of Accounting and Management at Gurugram University, Department of Management. I am here to talk about Introduction to Financial Management, Basics of Financial Management, and in this session we are going to talk about importance and objectives of financial management, two important aspects of financial management, objectives as well as the importance of financial management. So friends, financial management is a very important domain in the area of management education, and we have already had one session in the past. So financial management deals with three aspects of finance: requirement, receipts and disbursement of funds or money. So that's what financial management is. It is an art and science both, that we manage finance function at any organization or at any non-business organization. So with this background in mind, let's talk about importance of financial management. Financial management is taken up as backbone of any business. No business can survive if they fail or if they do not take financial management function at their business important, or they do not take care or pay attention to. So the financial management is very important. Here are certain points which will explain you the importance of financial management. Number 1, risk management. Number 2, financial planning. Number 3, optimizing resources. Number 4, increasing profitability. Number 5, economic stability. Number 6, encouraging employees. So let me talk about these 6 points in detail. So first is risk management. So risk is deviation from what we expect. Now the risk could be the financial risk could be economic risk could be many types. So here in the financial management, our major concern or the type of risk concern is financial risk, right? Be it not being able to pay debt coverage, I mean the interest on debt, or be it not being able to pay the principal money or the salaries on time when they are due. So there is a risk that I may fail to pay the dues when they become payable, right? Be it salaries, be it interest charges on debentures, be it any other obligation or rent or any such thing, right? Or bank overdraft facility I need to pay back. So this risk management is actually being performed well because of financial management, because we are able to make an assessment of that how much fund would I require today, tomorrow, day after tomorrow, and henceforth, right? So and where would I get them from? So requirement and receipt, as I said, is the crux, and finally disbursement, of course. So automatically, if we are taking care of financial management, our risk management is taken care well. The second importance of financial management is financial management is it helps us in financial planning. When I say the first thing, requirement, what I am doing actually in requirement, I am planning. I am assessing the requirement, means I am planning for my finances, that when, how much do I need, and where would I get that money from, and how, and where would I where would I get that money from, and how much I'm going to disperse, and when, everything. So I'm basically planning of my financial finances in the financial management by the help of certain tools and techniques which are part of financial management. Then it helps us to optimize the resources, because we talked about 5 A's in the past, somewhere in one session, right? So one of the A's that we acquire the fund and then we allocate. So when I say allocate, means what? I am deciding that I have X amount, I would be spending out of the X, I will be spending X part out of that total amount for this function, Y for this, Z for this, and so on, right? So basically what I am trying to do, I am trying to optimize the resources. I am taking care of receipts of the funds, I am taking care of the payments of the funds, I am taking care of all the obligation with the help of some scientific tools, right? So that is how I am optimizing the available resources. I am ensuring that my money is not lying unutilized. I am ensuring that how much I am retaining in my short term liquidity and the long term liquidity, how much I am retaining in the bank balance, and how much I am retaining in securities, how much I am retaining in long term investment as a business, right? Everything has a cost and everything has a different utilization. If I do not keep money in my bank, or I do not keep money in my tradable securities, I will, or I may face liquidity problem, right? But if I keep so much of money in my tradable securities or in my cash or bank balance, then that is considered to be the minimum income generating source of investment. Bank doesn't give you much interest, especially on a current account. So through financial management we keep a balance, that how much should I be keeping in the liquid form and how much should I be keeping in a long term investment form, and when should I liquidate those assets, be it current or long term assets. So everything is optimized, the resources are optimized. So this is how the financial management helps us in optimizing resources. The fourth is here, our profitability goes up. How come? If I am a good finance manager and I know that the short term, so I have 5 assets and the return on those assets is this much. To maintain a trade off between liquidity and risk, because more liquidity means less risk of and more risk means less liquidity. It's inverse, right? So if I am able to make a right assessment that how much money I need at what point of time in future, I will not unnecessarily retain my money in liquid form, right? I will invest it somewhere, and when invest means I will get return on that. So my profitability goes up, right? Because my cost of funds goes down, my return on investment goes up. So that's how financial management helps me in profitability. And when some organization or any organization is managing these functions very well, automatically there would be stability, right? There will be no crunch or sudden requirement of the funds and company is struggling or the finance guy is struggling, because he has done his homework very well. Through the financial management, he has used all the tools and techniques and assessed that this much money is required, this is the source of fund, and this is how the funds have been allocated very carefully, thoughtfully. So stability is essential for any business, and it comes certainly by performing a financial management function carefully. So that's how the financial management helps us achieve stability. So the last is, if the company is doing well, right? The company is doing well means they are going, employees are going to be happy, seeing at the stability, they are paid salaries on time, they see the progress, they don't find any crunch. So the employees feel good, and so the employees are stable. They want to stay there in the company. They do not leave the organization because they see financial stability in such organization. So financial management affects suppliers, your reputation. It affects employees. It affects your market share value. It affects so many aspects, right? So that's how financial management is so important. Now I will talk about the objectives of financial management. Financial management, there are two primary objectives. One is the profit maximization, another is wealth maximization. And I am going through the books, through the literature. Literature suggests two primarily objectives that financial management should pursue. But interesting thing is, there are lobbies in this regard. One lobby favors profit maximization objective of financial management, whereas the another lobby, it favors the wealth maximization objective of the financial management, right? So, profit maximization, the first thing here, I am going to take up as objective of financial management, and I am going to discuss points which are favor of this profit maximization objective, and then we will discuss the points which are against the profit maximization objective, right. So, first one, profit maximization and the points in favor of it. Number one, profits are obvious reason for any business. Number two, source of internal finance. Number three, it favors social cause. And lastly, number four, profits can be used to be, for at the time of uncertainty, risk and recession. So, let me explain these 4 points in favor of profit maximization as objective of FM, financial management. The most simplest language any businessman or any layman can understand is profit, right. Anybody would say, oh, if I am running business means I am running it for profit. I am not running an NGO. If you talk to a business, and the first idea ingrained in the mind of a businessman is that businesses are run only for making profit, right. So, it's the most simplest thing to relate to for any businessman, right. A businessman can relate it so well to this concept of that profits are obvious for any businesses. So that is why it is assumed that financial management should target to maximize the profit through the function of financial management. The objective should be to increase or maximize profit, because this is the most simplest and obvious reason for any businessman to get into the business. The second was source of internal finance, because it is assumed the profits, if they are of good quality, I am putting a rider here, right. If profits are of good quality, only then they can be converted into cash. And if we are having good quality profits, and then it will certainly lead to have cash for against those profits. So, that funds which we get by converting profits into cash, or which are actually quality profits, that becomes source of internal finance, right. So, you can use that cash, that profit amount converted into cash or equivalent to cash, so as internal source of funds for buying a machinery, for expansion, for paying salaries and what not, right. So, internal finance source means receipts, the reason to receive is profit. Wonderful, means business is doing very well, the quality of profit is good, it can can be converted into cash, because bad profits, your books may show profit, because profit is just the difference of revenue and expense, but you may not be able to convert it into equivalent cash, right. So, profits can become source of internal finance with a rider if they are of good quality, and that is why it should be taken as objective of financial management. Third is that social cause. If we have a profit business, if any business would have profit, only then it will be able to give back to society. We know that we have in India CSR compliance requirement, 2% of profits of last 3 years average is to be spent on corporate social responsibility, CSR. This is a mandate under the Companies Act, right. So, that is possible, so any social cause investment is possible or spending is possible if the company is making money, profit, right. So, if it is so important for for social cause, then why should not financial management aim to increase the profit? That's the logic this lobby gives. The fourth is the point in favor of the profit maximization, that the profits can be used when there is an uncertainty like corona, those periods when there is a risk of non-compliance or non meeting up the obligation of financial demand, or recession. right? In all those times, profits would help a business to sustain, to run, right? That is why financial management should target to increase the profit. These were the points in favor of. Now the lobby which actually goes in favor of wealth maximization, they condemn the objective of financial management as profit maximization, and they have certain points against the profit maximization objective. So what are those 4 points? So first is profit is a vague and ambiguous concept. The second is the profit ignores time value of money. Third is profits ignore risk and uncertainty. And fourth is it will lead to malpractices, social inequalities and exploitation. So let me explain these 4 points to you now. So these are the 4 points which are against perceiving profit maximization as objective of financial management. So this is the lobby which says wealth maximization should be the objective of financial management, not the profit maximization. Why? Number one, as I said, as you read, is that profit, they are the vague. You must would have heard the term gross profit, operating profit, net profit, profit before interest and tax, and whatnot. There are so many terms used for profit, the term profit itself, right? So the lobby says when the profit, they themselves are the concept, the term profit is so vague and ambiguous, how can we make it as a logical reason for financial management objective? We cannot make it as an objective of financial management because profits are so vague in itself. The amount of operating profit and net profit or gross profit varies significantly for companies, right? Especially for few sectors where operating cost is very high, for example, in manufacturing companies versus the service industry, where non-operating cost or the cost of sales and marketing could be so high, right? This is the first point. Second is the time value money concept is completely ignored under profit maximization. Time value money concept we will discuss in future in detail is primarily or broadly is the concept that value of money, for example of $1 or rupee 1, is not equal on all the days. So if I can pay 1 rupee and get something, whatever it could be, a toffee or anything today, I may not be able to get the same quantity of the product tomorrow. Or if it is 100 rupees, so the value of money is declining in normal inflationary situations. So it means the buying capacity of money is not same. Buying capacity of the same unit of the money, be it $100, 100 rupees and 1 rupee or 1, we keep on hearing from our grandparents that हमारे टाइम पे तो 10 रुपए में ये आता था या 2 रुपए में ये आता था या 1 रुपए में ये आता था, right? What is that? That is time value of money, right? So value of money varies or depends upon time and it changes over time. That's what the time value of money concept is, which is completely ignored in profit maximization concept because it assumes profit are earned throughout the same, equally at the same pace throughout the year, financial year. It also ignored the risk and uncertainty concept, which is very important. These are the two bases of financial management, two fundamental concepts basis upon the all decisions of financial management are taken are number one, risk, and number two, uncertainty. And the second is time value of money, right? The risk and uncertainty and time value of money, they are the two fundamental concepts or principles of financial management. Both are ignored. So risk and uncertainty is also ignored in profit maximization. Profits, because as I said, there could be profit as per your books, but they may not be convertible to cash, right? I may have profits of 100 crore in my books because they are made on accrual basis, but I may not have funds of 10 crores to pay salary. That is so the risk of converting the profit into cash is ignored completely because we take profit as the objective of financial management, right? So that is the point against profit maximization. And the last point against is that if we make that profit maximization is the objective of financial management, company may indulge into malpractices, it will lead to inequalities socially, it may lead to exploitation of laborers or workers, and that is why the lobby says we should not make it as objective of financial management, right? And these were the points against. Now coming further or talking further, what are the points which are in favor of maximization of wealth, as objective of financial management? So what favors? There are 4 points which favors that wealth maximization should be objective of financial management and not the profit maximization. So what are those 4 points? Number 1, it uses cash flows in place of profits. Number 2, the wealth maximization concept considers time value of money. Number 3, risk and uncertainty are considered. And lastly, it considers only quality profits. So those points which were against profit maximization become actually the points in favor of wealth maximization. So what is wealth maximization? Wealth maximization is the shareholders' wealth. When I say wealth, means I am talking about shareholders' wealth. As I said, the principles which are discussed here are primarily for corporates, and corporates would have shareholders, right? So you may question or you may think that I am talking about shareholders for a proprietorship firm or for a partnership firm. Shareholders are not applicable, there are only the owners, right, partners or the individual. But fundamentally all the principles, techniques and process, tools which we discuss under financial management, they are discussed for corporates, for companies, right? So that's why the shareholders' wealth is discussed here. So shareholder wealth is basically the share price and the number of share. So market share price and number of share, if we multiply them on a particular date or time, it becomes shareholders' wealth, right? So the objective is to maximize wealth, then to maximize profit. So and the point in favor of the this logic is that we do not use profits for wealth maximization, rather we consider cash flows. So cash flows are more reliable source of assessing the finance function or assessing the requirement, receipt and disbursement, which is of money, which is basically finance, right? Then the profits, because profits are based on accrual accounting. We all understand that. So whereas the cash flows are real, right? My actual payments is due on this day, and this much money is due in actual, or this much money is going to be received in actual, is more important than my books showing the profit. So we do not consider profits in wealth maximization, we rather consider cash flow, inflow and outflow both. The second point was that we consider time value of money. We use concept of discounting and compounding under time value of money. We discount the future inflows, we compound the expected future inflows, and then we compare it. We bring inflows and outflow at the same level by using discounting and compounding time value of money as tool, and that's what helps a management or manager to take decision effectively. The third point in favor of this is that risk and uncertainty are also considered. So we do consider the risk in non-receipts. We discount by using the risk and uncertainty. We discount the inflows and outflows by discounting risk and uncertainty factor, or by accommodating both factors into consideration while calculating inflows and outflows of funds. And that's why the wealth maximization is considered to be taken as objective of financial management, right? The fourth point is that we do not consider all profits, we only consider the quality profits. Quality profits means the profits which can be converted into cash, right? So that is why the wealth maximization should be taken as objective of financial management. So after this, the last point I want to discuss is the points which are against wealth maximization objective. There are not many in fact, The first one is difficulty in calculating cash flow. Number 2 is difficulty in predicting risk and uncertainty. Number 3, difficult concept for any layman. So, though we say that we use cash flows in wealth maximization concept, but the problem is in calculating cash flows, we find, in calculating cash flows, it's not that easy, because cash flows, to predict cash inflows and outflow, there are so many tools and techniques we need to use. We have to be very good in budgeting. We have to make a as best or accurate assessment as possible, which may not be correct all the time. Your all calculations of receipts and disbursement are based on how good you were in making the requirement or making the assessment of receipts, right, or controlling the disbursement. If you lose control on disbursement, your next payment will be affected, right? So it's not that simple and straight when we say the cash flows can be used as against profit, because profits are anyways going to be calculated. There's a difficulty in assessing the risk and uncertainty, because risk is about future, uncertainty is always about future only, and it's not that simple to predict. Nowadays we have many good models to predict risk and uncertainty, to predict inflow and outflow, but for times we have exception, even models get to fail, right? So a pragmatic approach with those model helps the best. This is what we say, but it's not easy. And the last thing is that wealth is something that everybody doesn't understand. Profit is something which everybody understand. Every layman, every lala in the business would know that what is profit. Every small to big businessman would know or understand the profits, but may not understand the wealth maximization. These are just the theoretical, or these are the points against the wealth maximization, but logically, primarily, if we talk about the average, essentially majority of the researchers and literature suggests that we should target to maximize the wealth of a company, especially when we apply financial management in corporates, then profit maximization. So with this, I would like to conclude, friends. Thank you very much.